Welcome back to the Theya Podcast, where we sit down with the brightest minds in Bitcoin and tech. Today, I had the pleasure of sitting down with Mitch Moore, the founder and CEO of Strong Wealth, a wealth management firm for Bitcoiners. Today's episode was fantastic. We talk about everything from integrating Bitcoin into long-term financial planning, tax strategies for Bitcoiners, estate and trust planning, retirement planning, and where traditional fiat advisors get it wrong. If you have Bitcoin and you don't have a formal financial strategy, you are losing the game. And in today's episode, Mitch is going to walk you through exactly how to do it. Stay tuned for this great episode with Mitch Moore. Mitch, how's it going, man?
It's going well, Joe. I appreciate you having me on the podcast, man. Like we were saying just before we hit record, there's really not a lot of Bitcoin podcasts that are getting into the weeds tactically, talking about personal financial strategies. We seem to be still selling Bitcoin to Bitcoiners, even though we're all bought in. I still listen to all the podcasts that throw out the big price targets and continue to hype up Bitcoin because it gets me fired up still as well. But I think, there's a lot of people that are looking for this kind of advice around translating. Okay, well, I'm on board with Bitcoin, and how do I fit this into my personal, finances and my financial plan ultimately. So I'm excited for it.
For sure. Yeah, no, we have the Bitcoin marketing department is big enough. Obviously it is growing, exponentially, but we need we need people like yourself to actually, Bitcoiners are bought in. What can I do now that I am bought in with this Bitcoin? How can I have a formal Bitcoin strategy? So I'm really excited, and I'm really excited to learn more from you, frankly. So I will be putting on my student cap for this as much as the listeners and viewers will too. So first things first, let's talk about integrating Bitcoin into long-term financial planning. What is the value prop of Bitcoin in long-term financial planning? How can it be incorporated into, long-term wealth building strategies? How does it fit in a broader portfolio for those who may be planning for the future?
Yeah, absolutely. I mean, how does it help, or where does it fit into a long-term financial plan is, we've seen since really 2008, I would say, that the financial industry something broke. And what broke was the introduction of quantitative easing and essentially the Fed taking over a lot of the markets. And so now everything is really beta to, global liquidity or, USM2 or, whatever you want to say. And I was researching recently, and I looked back to 2001 to see how much the M2 money supply had grown, and it had actually outgrown the S&P 500 over that time, from 2001 to today. And so, the traditional financial planning strategies is, okay, buy the index, move on with your life, go be good at your job, whatever. You don't have to do anything else. But I just don't think this kind of broad market vanilla portfolio strategy is going to work for people anymore, especially those who are nearing retirement or in retirement right now who still think or believe in the 60-40 portfolio. Our money supply is growing at an exponential rate. And if your wealth is not keeping up, well, then you're going to run into some serious problems over a long time horizon. So it's where Bitcoin comes in is, again, it saves the day for your long-term financial plan and the dreams and goals that you want to achieve. We'll obviously get into the specifics of that, but without Bitcoin, we'd still probably be doing this whole 60-40, portfolio strategies that just don't really work anymore. And I don't think enough people are waking up to realize that. Obviously Bitcoiners are, but fiat financial advisors definitely are not. And I think a lot of people are in, it may be quicker, but I would say 20, 30 years are going to wish they would have learned about this sooner.
Absolutely. Yeah. I mean, if you look at the 60-40 portfolio, 40% of that being bonds, we were in a bond bear market for a very long time. You look at the total return index on the long bond, either on Y charts or the Bloomberg terminal, and you could see it had basically its worst 2 or 3 years in decades as the Fed was getting ready to raise rates, and while we were experiencing that crazy inflation. And so if you had a 60-40 portfolio, or you had some kind of solo position in bonds, the traditionally risk-free instrument, you were getting totally trounced in nominal terms, not to mention real terms, because of how hot CPI has been running, but also how hot M2 inflation has been running. And so it sounds like what you're saying is, Bitcoin is, one of the only instruments that has actually outpaced M2 growth, and therefore it needs to be incorporated in some way into portfolio allocation. And the 60/40 portfolio is kind of dead. Would you agree with that?
Absolutely. Yeah, it is dead. It is dead. And you mentioned CPI as kind of our hurdle rate, maybe, of inflation that we need to be getting over. But in our minds, at Strong Wealth and with our clients, we're looking at the money supply growth. That is our hurdle rate to determine if our wealth is actually growing or not. And I believe that everyone, who is investing should be looking at the money supply growth over CPI. CPI is heavily manipulated, based on what's included into the calculations. And by the very nature, it is an average of the price increases over time. So for some people, it's going to be a lot higher. And I would argue for many people, if they're investing in the markets, they're even working with a financial planner at all, their personal price inflation is probably much higher than CPI because they're actually trying to achieve, higher goals. They're not trying to just, buy Netflix and Domino's their entire retirement, like Sailor points out. Those are the things that are included in the CPI. And so, we really have to be planning ahead for this. If you want a, house in the mountains to retire to and make memories with your family, like, you're going to have to grow your wealth at a much faster pace than 2, 3, 4%, whatever's quoted by CPI. It's going to be in the maybe 9% range, like we've seen, the money supply grow in the US over the past, 20 years or so.
Absolutely. Yeah. And so then it becomes a question of looking at assets that have the best compound annual growth rate over a multi-year, if not multi-decade time horizon. And Bitcoin stands alone at the top of that heap. You look at the S&P 500, its compound annual growth rate is somewhere between like 3 and 4%. You look at Bitcoin, it's above 10%, right? And so, it seems to me that Bitcoin is kind of it's the secret sauce to put into your portfolio in order to actually juice those returns and get up to that 9 or 10% that you need in order to outpace the growth of the money supply.
Yeah, absolutely. I mean, I know that all the Bitcoiners listening are probably, 75 to 100% Bitcoin allocated, as far as their net worth goes, which totally get, we work with those people as well. But I wish that I could kind of shake the traditional financial world, or the people who are nearing retirement, or they're living off of fixed income in retirement, or maybe the 60/40 portfolio, and just get them to realize that, okay, even a 5% inflation or 5% allocation to Bitcoin in your portfolio can help you achieve the results that you want. I mean, it is the greatest risk reward ratio out there, and it's an absolute no brainer for anyone who, I don't care if you're 85 and you're nearing the end. It doesn't matter where you are in your financial journey. 0 is not the answer. Anything above 0 is where you need to be.
100%. Yeah. And so what are some of the strategies, I guess, that you go about talking to people who may be a little bit more risk averse? They don't know a lot about Bitcoin. I know that Strong Wealth is wealth management for Bitcoiners, but I'm sure you've had conversations with people who, have done the 60/40 portfolio and are planning for their, long-term financial future, who might be more skeptical about Bitcoin. What's the route that you usually take to kind of sell Bitcoin to those people, in a sense, and get them adding some of it to their portfolio?
Yeah, absolutely. So when most people think about risk related to their portfolio, they're thinking about the risk of losing money. So they're like, I am a very conservative person. I don't like to take a lot of risk. I like to keep a lot of cash on hand, or maybe have a lot in my high yield savings, or, have a good amount in treasuries, or, whatever it is. And so they strictly view risk as losing the principal value of their portfolio. So what we try to demonstrate to them is we need to flip risk kind of on its head and make you realize that the risk in the short term is much the risk in the short term as far as volatility goes, of losing your principal value is much less of a concern for us and for you than 10, 20 years from now, the risk of you not being able to afford the life that you want. You thought you'd be able to take your grandkids to Disney World and, show them this stuff and make memories and take pretty pictures, or maybe go out to the mountains and take them on your favorite hikes, whatever it is. You thought you were going to be able to do that, but now you can't do that because you chose to take less risk in your portfolio by holding a lot in cash, a lot in bonds, so it's not fluctuating a lot, but you actually took on an even greater risk and not growing your purchasing power over time and not growing your wealth over time. And so really where we attack first with that person is we're showing them, okay, you need to break away from thinking of CPI as your hurdle rate, like we mentioned earlier, and we show them the money supply growth over time, and we give them the reasoning behind why we believe that will only continue to increase faster and faster. And so once they see that, they start to understand that there really is this double-edged sword of risk. Yeah, we can sit here, in the short term over the next 1, 2, 3 years, whatever, and really worry about the value of our portfolio going up and down and not want it to move very much. But we also need to look at 10, 15, 20 years from now. And if we don't take any, risk in the portfolio, well, then you're almost guaranteed to fail. Holding money in cash, holding money in treasuries, holding money in your high yield savings account, whatever those safer investments from a traditional financial perspective are actually guaranteed to lose over time. And so getting them to realize that and help them to see that, no, we are trying to get you to have the greatest probability of success of achieving your long-term goals by adding this into your portfolio, helps them to open up to the idea in the first place. So that's where we attack first, is just getting them to see that there's a flip side to risk, versus just loss of principal value in the short term. There's the risk of not achieving the goals that you want to achieve and preserving your wealth over time.
The real risk is the opportunity cost of not holding Bitcoin. The real risk is what you will miss out in the future should you decide to play it safe or play it conservatively.
Yeah.
You may think you're preserving your wealth, but nominally you're staying at basically the exact same spot. And then 40, 50, 60 years down the line, wherever you are in your financial journey, you will come to realize that, oh my goodness, everything that I thought I could afford, I cannot afford.
Yeah. And that's when it's too late. And so that's kind of like something that honestly we have to kind of break beliefs with. And anyone who thinks that they don't need to work with a financial planner, we have to speak to, okay, cool. You may not think that you need to work with a financial planner right now, and you can push this off, on the back burner. It's not an urgent thing. It's an important thing, but it may not be an urgent thing until, 10, 20 years from now, and you're just nowhere near where you thought you would be because you did not set yourself up on the right track, a decade previously. So then you reach out to a financial planner and want to fix the issue, but it's like, well, you missed out on 10, 20 years of compounding, taking the right actions over time. And, frankly, there's probably not a lot we can do now. It's too late. We'll help you make the most of the situation that you've got yourself into, but it's always, always best to be, starting early and proactively planning 10, 20, 30 years from now. And when we think in that long-term approach, Bitcoin becomes obvious, at least to me and to our clients. So.
Absolutely. Bitcoin is inevitable on a long enough time frame. It becomes obvious. Everyone needs perspective, and you got to meet people where they are. Speaking about planning for the future, long-term planning, one of the things you have on your website talks about starving Uncle Sam with personalized tax strategies. You name the second biggest enemy to financial freedom, other than the money printer, is the IRS. Why is the IRS and Uncle Sam the second biggest enemy to financial freedom? Rhetorical question, because everybody on this listening to this probably does not like paying taxes very much. But why did you guys feel the need to say that?
Yeah. Absolutely. I mean, like you said, it's pretty obvious to Bitcoiners, and it's obvious. It's pretty obvious to really everyone in the United States that is trying to build wealth. So I would argue, there's a lot of people out there that don't like the IRS, and so that's another avenue we can take with explaining and orange pilling other people. But I mean, it's, our 30% of our income every single year goes to taxes. You go to the store and buy something and you pay, 7% sales tax or whatever it may be. You have your property taxes on your house, or, your registration fees on your car, or, whatever it is. There's so many different taxes, your capital gains taxes, they inflate the money and drive up the asset prices, and then they take 25% of the gains that you made. So you took all of the risk with your investments, but then they come in on the back end and say, well, we didn't take any of the risk, but we're going to take 25% of the reward on your investment. So it seems like every time we walk outside, we're getting taxed. And as we know, being in the financial industry, it's like, well, if we put that money to work in 10, 20, 30 years, it could be worth a substantial amount. And so it really just kind of chops you off at the knees, from a long-term financial growth perspective, when it comes to taxes. And then not to mention the estate taxes on the back end, where, the rates get up as high as 40%. Yeah, there is an exemption and we can go into that, but if they continue to inflate the currency, away like faster and faster, well, these exemptions are not going to keep up, because they're going to manipulate CPI and say, oh, inflation's only 2%. We only need to raise, these tax brackets or this estate tax exemption, by 2%, even though, yeah, we're growing the money supply by 12, 15, 20%, whoever, whatever it's going to be into the future. And then we'll just go ahead and take 40% of your estate on the back end and not let it be passed down to your kids and your grandkids, and actually help you build generational wealth. So, like you said, it is obvious really to everyone why the IRS is the second biggest enemy outside of the Federal Reserve. But that's why it's critical to have someone in your corner that understands the tax code and can help you proactively plan to avoid this stuff.
100%. Yeah. One of the biggest ways that wealth gets stolen is by having an overly complex tax code. So, the wealthy individuals who are very financially savvy can go about paying very little taxes, whereas people who simply are just trying to make ends meet, they don't have the time or the wherewithal to be able to plan for that. What does tax strategy look like when you are planning long-term, when you're doing long-term financial planning? And how does Bitcoin fit into that? What are the tax strategies that you guys employ?
Yeah, so I mean, it's a very broad question, so we could go, really down any avenue that we wanted to. We work with a lot of business owners, and so there's, a ton of opportunities for tax savings with business owners. That's really the number one tax savings vehicle, I would say, in the United States. Some tax strategies that are available to everyone is utilizing qualified accounts, Roth IRAs, Roth 401ks, traditional IRAs, regular 401ks, maybe HSAs, these qualified accounts that we can use with Bitcoin. I hear a lot of people say, oh, I have money tied up in my 401k, so I'm just going to buy, maybe they buy the ETF, maybe they don't have access to it, or they buy MicroStrategy, or they think that they can't even buy those investments in their 401k. They say, it's trapped in there. I don't know what to do. You can actually utilize that to buy spot Bitcoin. You could self-direct the account and, buy really whatever you want. But in our, from our perspective, we're using that to buy Bitcoin. So there's a ton of tax strategies that we could dive into. Obviously, with our fiat system, real estate comes with a lot of tax advantages. I think that goes against the Bitcoin ethos in many ways to be a real estate investor and a Bitcoiner. But if it makes sense, we can do it. Also owning Bitcoin miners, is something that we're looking into right now for a client. He has been buying Bitcoin in his solo 401k that he was using through his business since 2015. And so he was just stashing away as much as he could in that and buying Bitcoin with it. And now it's, obviously turned into a substantial amount. And he's like, he is starting to get concerns now that the government's going to, come after qualified accounts, and use that to kind of feed the system. And with him having a ton of Bitcoin in he's even more concerned. And so he's like, how do I get this out of here without paying, 30-40% in taxes? And so we're actually looking into buying a substantial amount of Bitcoin miners and utilizing the depreciation rules that come with, primarily with real estate, for Bitcoin mining. And so we may be able to offset the distributions from his retirement account and then still be somewhat, allocated to Bitcoin. When we ran the numbers for that going into this bull market, it may end up being such a profitable investment that he won't get tax losses, but, we could, finagle things, if you will, to buy Bitcoin miners at the right time and make this work. So there's a ton of directions we can go if you want to dive into any of those avenues. But again, that's why it's just so important, because you're going to be taking a 30-40% haircut on anything that you do if you're not proactively planning to avoid it. And so if you really, take Bitcoin as seriously as we do and think it is, the greatest asset ever discovered, invented, whatever you want to say, it's important to make sure that you're protecting your stack from the IRS. So I'll let you drive us wherever you want to go from there.
100%. Let's talk about the traditional retiree. Let's say, they're 30 years old. They're still relatively speaking at the start of their journey. They have been contributing to, let's say, a self-directed IRA of some kind. What is the strategy that you would employ with that person in order to stack Bitcoin and then minimize the amount that they pay in taxes?
So you said it was 30 years old?
Yeah, let's say 30.
Gotcha. So yeah, I mean, if they have a self-directed 401k, we can use that to offset income taxes. But something else we also need to be thinking about is taxes on the back end. So if you're putting, I see a lot of people talking about, buying the ETF or buying MicroStrategy in their 401k, and expecting, obviously we all expect that to grow substantially. What they're not thinking about is the tax bomb on the back end whenever they actually want to live off the money. When you're pulling money out of a 401k or other pre-tax account, it's going to be taxed as income. And, if you're 30 years old, you have 20 years probably at least to let that, continue to compound before you even think about retirement. So a lot of people will run into this problem where they are just, stuffing money into their pre-tax 401k for so many years, it grows to a substantial amount, and then they have no flexibility. If you have all of your money in a pre-tax 401k and you want to retire at 45 because you made a good decision and bought Bitcoin or MicroStrategy early, and you're like, hey, I can go ahead and do this. Well, now you're looking at a ton of, early withdrawal penalties and potential, very high income taxes because you have no flexibility of other assets outside of that pre-tax qualified structure. So, if I was that person, I would be thinking about tax allocation diversification. Most people talk about diversification and owning different types of investments, but we want to look at tax diversification and making sure that we are prepared no matter what happens. So if we already have enough in the pre-tax 401k to get us to, 60 years old and beyond, great. Now we should probably start looking at, putting money into maybe an HSA if they have it available through their employer, or a Roth IRA, or just a taxable account. So that we can have the flexibility to be able to manipulate where we're pulling income from, depending on where you are, or if you want to retire early, to basically minimize the tax bill as much as possible. So, yeah, I mean, if a very high level, if that's the person we were talking to and they were just, continuing to pile into their 401k, we may start to think about looking, into other avenues so that we don't handcuff ourselves down the road.
Fantastic. With that said, obviously there are a million routes to go down with tax planning, a million different kind of customer profiles we could use. For viewers, if you are interested in learning more about Bitcoin tax strategies, you can go to strongwealth.net, schedule a free discovery call with them. But for now, I want to talk a little bit more about estate and trust planning. I want to dive into that. So talk about estate and trust planning with Bitcoin. Delve into kind of the nuances of transferring Bitcoin through trusts and estates, and talk about how the strategy that needs to be done in order to securely pass Bitcoin on to heirs while navigating those legal and tax implications and not getting a massive haircut.
Yeah, absolutely. So at the most basic level, I think a lot of people don't realize that if you don't actually hold your Bitcoin, if it's not owned by a trust, so revocable living trust is the most, basic level of a trust, your Bitcoin is actually going to go through probate, which is really the public court process of making sure that your assets are passed down to, whoever that the judge decides if you don't have a will. But if you do have a will, you're still going to go through probate. And now your Bitcoin is going to become completely public. The judge is going to say, here's how much Bitcoin Joe owned, and here's where it's going, to these, 3 people, or to this one person, or, whatever it is. And so a lot of people need to be thinking about this. We tend to put off estate planning because, again, it feels like, oh, I don't need to worry about that until I'm old, until I feel like I'm about to die. But at the same time, we could die tomorrow. We don't know. And so it is very important, even though it doesn't necessarily feel urgent. It always is. And so Bitcoiners, we are concerned about our privacy. That really matters to us. And so I personally do not want a judge to dox my Bitcoin, but also I don't, want I don't want them making the decisions on where the Bitcoin goes. And so, if you are holding Bitcoin and add a custodian, whatever, you may be able to add a beneficiary to your account, and cool, that works. But I think most of us don't want to hold our Bitcoin on an exchange or with a custodian, rightfully so. And so at the very basic level, it's important to, get a trust structure in place, a revocable living trust that will allow you to direct, your assets the way that you want them to be distributed when you pass, and also avoid that probate process so that your assets do not become public knowledge, at that point. The other considerations that's obviously the legal considerations, but we also have to consider the education and the custody aspect of estate planning and passing our Bitcoin on to the next generation. Most people that we talk to, it's the guy, the husband of the family, and they're Bitcoiners, super orange pilled, but the wife could care less, or couldn't care less, I should say. And it's like, well, I trust him, but I don't really know anything about it or care to know anything about it. Maybe kids are small at this age. And so, we need to be thinking about this stuff. We need to be educating our spouses or educating our heirs on Bitcoin so that if when they do receive it, they know what it is, they know how to access it, and they know how to manage it and allow it to actually benefit their financial future for generations to come. It's very important to at least avoid that probate process, make sure that, you also get powers of attorney in place to be able to make decisions on your behalf if you become incapacitated. So, that's something else that people need to be thinking about. Okay, I don't pass away, but I get into an accident and I can't make decisions for myself. I can't do things for myself. And maybe it's both my wife and I. What's going to happen then? Well, you want to direct who's going to be able to make decisions for you. And that's something that you can set up through a power of attorney. If the judge decides who's making decisions for you now, they may sell all the Bitcoin and say, well, we'll go ahead and sell it and make sure that, they're in something safe so that we can pay for their life, live out the rest of their days, So it's critical to make sure that we're educating, we are assigning the right people to be able to make decisions on our behalf, we're avoiding that public probate process so that our assets do not become public knowledge. And then we can get into the, higher net worth strategies to avoid that estate tax haircut if you want, or if you want to. But that's really the critical things that apply to everyone at this point, regardless of your net worth.
Yeah, for sure. Let's get into the higher net worth strategy of avoiding that haircut.
Yeah. So as of right now, back in 2017, Trump actually raised the estate tax exemption. And so currently it's 13.61 million per person. So per couple, married couple, it's 27.22. You add those together. And so if your estate value is under that amount, if you were to pass away, let's say, I'm a married couple, I pass away, we both pass away tomorrow in a car accident, whatever, and our estate is $20 million. We're under that limit. It will pass completely tax-free to our heirs. That's at the federal level. Now there are state estate taxes as well. That's a tough phrase to say there, state estate taxes. But we'll just talk at the federal level because there's a ton of different states, and the exemption limits and the tax rates are all different for each one. So you'll want to look into your specific state. But at the federal level, if you're below that amount at this point, you do not have to pay any estate taxes. Now, that exemption is set to actually sunset or be cut in half in 2026. So it's going to, fall from 13.61 million per person back down to 5 to 7 million, depending on the inflation adjustments since 2017, whatever that may be at that point. And so, for someone who maybe they're single, we actually just talked to a prospect yesterday who was around this $7 million range, and they're single now at the point, and older, and they have a significant allocation to Bitcoin, expect to live for another 20, 30 years. Well, we really need to start thinking about this, because we're going to be right at that estate tax exemption level. And if our estate continues to compound and grow, Bitcoin, performs like it has been performing, which very well could happen, we're looking at potentially $20, $30 million estate. Now, every single dollar, I won't say every single dollar, but those tax rates, once you get above that estate tax exemption, raise to 40%. So pretty quickly, they become 40% estate tax. And so, we get this exemption, cool. But if I, have worked hard my entire life, took risk, got into Bitcoin early, and my estate is, $50 million, and the exemption levels are at $8 million. Okay, now I have $42 million that gets a 40% haircut. It doesn't get passed to my kids, to my grandkids, like I expected. I'm not able to pass on the generational wealth as much as I thought I was going to be able to. And, that can be avoided with proper estate planning strategies. So for someone who is in this higher net worth range, or you own a very significant amount of Bitcoin that could grow very quickly to become in these ranges or surpass them, how you can use up your estate tax exemption essentially is through gifting strategies or irrevocable trust structures. And so typically where we go is those two routes. So we can, one way to avoid taxes is just gifting to your heirs. So you could gift, right now the exemption limits are $18,000 per recipient. So if you gifted $18,000 to your son, you don't have to report that to the IRS. Now, if you are a married couple, then you could do $36,000 per person that you're giving to. And so, that could become a substantial amount over time. Gifting $36,000 to every single child and grandchild, could avoid a lot of estate taxes, when you get to that point. But the big tax savings strategies are going to come with irrevocable trust structures. So essentially what you're doing is you are gifting the assets to a trust that effectively move those assets out of your estate entirely. So, if you're somebody, let's say right now with $30 million net worth, let's say 15 of that is in Bitcoin, you could go ahead and move, let's say $5 million into an irrevocable trust structure worth of Bitcoin. And if you're, 45 years old at the time, well, that Bitcoin could very easily become, $100 million by the time you're ready to pass. So you have effectively moved those assets out of your estate while they are lower in value. And then as they continue to grow over your lifetime, and then when you pass, they will just get passed on to your beneficiaries and completely avoid that estate tax, entirely. So you're taking the assets out of your estate while they're at a lower value, allowing them to grow completely tax-free and be passed on to other generations without receiving that estate tax. So obviously the exemption limits apply to the amount that you can, put into these structures, tax-free. So you're effectively using them up, right now. And that's why the exemption getting cut in 2026 is a big deal, because right now, I could effectively use, 13.61 million to move into an irrevocable trust and not owe anything on that. But when the exemption gets cut in half, now I can only do that with 6-7 million and not have to worry about the estate taxes. So while the limits are higher right now, you could take, major advantage of that and end up really saving your family 7-8 figures in taxes, depending on how much Bitcoin grows and how much time you have left to live.
Phenomenal. Mitch, you're a financial planning wizard. I love it. And of course, anybody who is higher net worth, or even not higher net worth, if you are, like me, young, or even, close to middle age, regardless of your net worth, I would advise going to Strong Wealth to discuss more about your individual needs for retirement, for planning your estate, etc.
I will just throw in there. I appreciate that. I will just throw in there. There are certain types of these trust structures where your spouse can continue to benefit from the assets, even though they're technically out of your estate. So your spouse could continue to benefit from them. Your heirs could benefit from them while you're still alive. You could also set it up to where it donates to a charity. So maybe your church or something, the assets can continue to kind of spit off some income donation to your church. And then whatever's left when you pass can go on down to your heirs from there. There's just a ton of strategies that you can use to where we can kind of game the system, because it is so complex and we have the best asset ever in Bitcoin. It is the perfect asset. I'm writing a blog right now that will be up on the website probably by the time this is out, explaining why Bitcoin is the perfect asset to hold in these trust structures for long-term generational wealth. So.
Excellent. Well, be on the lookout for that. There are already a whole host of great write-ups and blogs done by Mitch, so I would advise going and checking those out. I want to shift gears here to talking about traditional financial advisors, or we'll call them fiat financial advisors. Obviously, we've talked about huge misconceptions around Bitcoin, specifically as it pertains to risk. But what are some misconceptions or blind spots that financial advisors in the traditional sense have about Bitcoin? And how those ultimately impact their clients' long-term financial goals, how the ignorance of Bitcoin and other common pitfalls that traditional financial advisors fall into are actually undercutting their clients' long-term financial goals.
Yeah, so we really hinted at it a lot earlier, but I would say the biggest area where fiat financial advisors are going wrong is this portfolio management, like you're saying. When most people are queuing up a financial plan, they're putting in a lot of assumptions to, projections to see what the future scenarios look like. And I'll just tell you right now, even I would just throw in 2%. Now, this is the Fed's target inflation rate, and that's the inflation assumption that probably every single fiat financial advisor is using for the costs, that someone is going to experience in retirement. So, we already kind of harped on the, already retired with 60-40 portfolio, et cetera. But if we look at somebody who is in their 30s and 40s, still accumulating significantly, I expect inflation to be high and continue to grow faster and faster over time. This, whole money supply growing exponentially, it's really gotten out of control, and we look at, the interest on the national debt, for example, is the largest line item now. I don't know. You probably know exactly what it is. 1.5 trillion.
$1.9 trillion by the end of the year.
Okay. So 1.9 trillion. So that's, I think 2024 tax revenue was like 4.8 trillion. So we have 2 trillion of that going straight to the interest on the national debt. As you know, this can create a kind of debt spiral where they have to continue spending more and more just to pay off the interest of the old debt, which then adds to the debt and increases the interest. So we just get this compounding loop, of this national debt spiral where, this money supply in the United States and internationally is going to continue growing faster and faster at an exponential rate. And so a 2% inflation assumption on a long-term financial plan of somebody who's 40 years old, wants to retire in 15, 20 years, and then have a 30-year retirement after that, we're looking at 45, 50 years that we have to be planning for. I'm sorry, but 2% is not going to be the inflation rate for that, that period of time. And so if we are completely underestimating what it is going to cost to achieve and pay for the quality of life that we want to, well, a 60-40 portfolio, again, going back to that, looks pretty good when inflation is 2%. But when we look at the money supply growing by 12% compounding every single year, okay, well, our expenses are going to look a lot different in that scenario, and a 60-40 portfolio will not work. And so I hate to say it, but these fiat financial advisors are really steering their clients astray. We may not see it play out and actually come to fruition for 20 years from now. But that will be when, again, it's too late. You didn't plan accordingly, and now you are significantly behind the 8 ball, and you want to go retire, but you won't even be able to afford your current quality of life. You may have to retire and have a lower quality of life because you're no longer bringing in income, and your assets will not be able to pay for the life that you want and create the impact for your family that you want. So that's the biggest one for me, is they are completely underestimating personal price inflation for their clients. And I think it's going to lead to catastrophic results over a long time horizon.
Yeah, we've seen obviously data is not only manipulated, but it is done so in such a way because they are trying to make it seem like the problem is, much smaller than it actually is. We know that CPI inflation is just colloquially termed inflation. And so, when we think about it from that perspective, somebody, a layman may assume that that is the rate at which their wealth is getting devalued. But in actuality, the things that they are buying, the things that they prioritize, and their wealth that they've been sitting on is devaluing at a much faster rate. And so these financial planners are really leading their clients astray, as you said, by focusing on these, metrics spat out by the BLS and other economic organizations, rather than looking at actual wealth devaluation from the money printer and our extremely reckless and runaway government spending.
Yeah, absolutely. And, I think the other way that fiat financial advisors are steering their clients astray is not giving Bitcoin the attention that it deserves. And what I mean by that is, okay, let's say that they did study it there and they think that, their clients do need to ignore it. I think that they need to start adding an allocation to Bitcoin as a hedge against them being wrong. And why they need to do that is because if Bitcoin does become this kind of reserve currency that we're talking about, it will demonetize many other assets. No longer will people want 100 rental houses to store their wealth in. No longer will people blindly DCA into the S&P 500 and their 401ks just to preserve their wealth over time. The S&P 500 has effectively become the savings tool for this generation, and people just see that as a no-brainer, safe investment. But if Bitcoin becomes what we believe it can become, and believe it likely will become, it will demonetize these other assets, and valuations that are absolutely insane in the S&P 500 and the stock market in general will be cut. I don't know by how much. I don't know what the future necessarily is going to look like, but there will be that deflationary, event happen over time where the S&P 500 is not going to be what, your saving grace over a 30-year time horizon, or, owning 100 rental properties again. When Bitcoin is starting to suck up a lot of the global liquidity and people realize, oh, I don't have to deal with tenants and hire a property manager and pay unrealized gains taxes on my real estate property taxes. And, they realize that Bitcoin is a much better asset for long-term savings. I think all of these other assets are going to take a big hit. And so if that happens, well, then you have, again, the debasement of the dollar. You have the inflation that's coming at you from behind, but then you're also getting hit from the front when your current assets you're using for long-term wealth preservation are being demonetized. So it could be a very, again, catastrophic scenario where, things look good right now on your Monte Carlo simulation with 2% inflation rate and a 10% compounded growth rate on the S&P 500. But when that's no longer reality, you can put in whatever numbers you want into your financial planning software. Your clients aren't going to be happy.
For sure. And I want to amend what I said earlier because I got the compound annual growth rates totally wrong. Bitcoin's compound annual growth rate over the last 13 years in US dollar terms has been close to 100%, 99.47%. And so really it's so, you can ignore Bitcoin at your own peril. But if you actually run the numbers over a decade plus, you can see that Bitcoin offers the kind of hedge against monetary debasement that not a single other asset can even come close to.
Yeah. Yeah. Mic drop.
Yeah. Oh yeah, exactly. So I want to ask you before we talk about some common pitfalls of integrating Bitcoin into financial plans. One of the things that you have on your website is that we believe in God, not government, and that allows us to see clearly as we guide you to financial freedom despite our broken financial system. Discuss why your strong faith in God is such a core tenet of how you operate as a financial advisor and how Strong Wealth operates.
Yeah, absolutely. I mean, at the end of the day, we are not the actual owners of the wealth that we have. We are temporary stewards of that money. So God has entrusted us to, with those resources, to steward those resources for Him and His kingdom. And so that is the ultimate position that we're taking. We're able to kind of detach from, money being our God, essentially, which is what a lot of the financial system has become, and even what a lot of, just everyday people, view money as. Money runs their life and really is the biggest factor in all of their decision making. And so us being able to zoom out and see the world for what it really is, a broken world that ultimately has, this broken financial system, we can, one, help our clients just have peace is a big thing. Even if you're not a Christian, having a financial planner who is Christian guiding you will help you feel that sense of peace. That is the fruit of the Spirit that we talk about as believers that, I know you're very familiar with, Joe, with your faith. And so, it is the foundation of everything that we do. It's the foundation that we serve, clients. That's the heart that we're coming at this, from. So that's a big one, is being able to just offer that peace in the storm, because I believe there is probably going to be a lot more storms, within our country, especially if Bitcoin becomes what we think it can become. There will be some hard times, most likely, in that transition, I suppose. And even, we work with Bitcoiners specifically. And so one big thing that I see with Bitcoiners is, I have this anxiety that I need to accumulate as much Bitcoin as possible. And cool. That sounds good when you tweet it. But if you really take a step back and think about what that actually means, you're saying that you want to accumulate as much money or as much wealth as possible. And when that becomes your top priority, at the expense of everything else, I would argue that you have lost sight of what's really important in life. And I think there is a subsection of Bitcoiners that have lost sight. They view Bitcoin as the end and not a means to an end. One phrase that I like to share is HODLing is not a financial plan. Meaning that if buy and hold Bitcoin is the answer to every financial question that you're asking yourself, you are either asking the wrong questions, or you're not asking the right questions, or you're not asking any questions at all, if that's what your financial plan is. And so you're really jeopardizing your family's financial future by placing that as your top priority at the expense of everything else. And so what our service allows is we're allowing you to translate the wealth that you've been able to accumulate into real impact for not only your family in the immediate time, but also long term, the generations to come after you. And then, also we think about generosity. That is something that we encourage tremendously for our clients. If they are Christians, we encourage them to tithe 10% of their income on a monthly basis. We believe that that is important. If we read the Bible, and God says to test him in that. And, we believe that we should be tithing on a consistent basis, and God loves a cheerful giver, and he will bless you accordingly. And so if we believe that truly in our heart, that that is what is best for myself, that is what is best for you, Joe, and we believe that's what's best for the client, we are doing our client a disservice by not encouraging them to live out the principles that God has laid out for us, in the Bible. And so, yeah, I mean, like I said, our faith is really at the root of everything that we do in our lives and in our business. Does that mean that we will only work with Christians? Absolutely not. But we're still going to encourage this generosity piece and demonstrate the fruit of the Spirit that we have being believers, for our clients, because we believe it's the best way to live, on this earth and in this broken world. So, yeah, there's a lot of things we could go into, even specifically related to Bitcoin. I find myself now really recommending Thank God for Bitcoin, the book, to a lot of people. It's like the most recommended book, I would say, for people who already get Bitcoin, but they don't necessarily see the parallels and the connections to our faith. So, yeah, that is how it ties in. And my business partner, for example, he is 100% Bitcoin. Yeah, because he believes in Bitcoin, but also because of the broken system that we have and how it, oppresses the poor, how it is misleading. And, inflation is stealing, or, whatever you want to say. There are really moral and ethical implications with being a willing participant in our current financial system in the way that most people are today. And so Bitcoin has given us the opportunity to opt out and say, I don't stand for that anymore. Yeah, I believe Bitcoin could make me wealthy in the future, but it's even bigger than that for me at a foundational level. And so that's where we have come to. And then also how that influences how we serve our clients at Strong Wealth.
Yeah, absolutely. I mean, there is obviously a wealth crisis in this country. There's a financial crisis going on in this country where people are increasingly destitute. But even going along with that, and I'd argue even more so, there is a crisis of purpose and a crisis of meaning. And coming back to the church, if you've fallen out of it, is unbelievably important. If your sole priorities are accumulating wealth and nothing more, then by the time you are 50, 60, 70, and you haven't actually made a conscious effort to use the resources you've been given. You didn't earn any of it. You've been given it. It is a temporary gift. Then you will look back and you will wish that you had, because when you're 50, 60, 70, you don't have a family or a community, or you haven't helped bring heaven down to earth in some way to the best of your ability, like we've been instructed to. Then it's really all for naught. And so I think people are craving People are craving the ability to preserve their wealth as much as they are craving purpose and meaning. And that can be found in being a steward of what you've been given and actively working to better your church, your community, your family.
Yeah. 100%. I was actually talking to another believer Bitcoiner recently, and he was telling me how he just learned that his church, this is something that's important to me, and something that I'm working on personally with my church in Colorado Springs, is getting them to understand the financial system and how they should be stewarding, their money. But I was talking to this other guy. He was saying that he found out his church had been leaving money in cash for the last 5 years, saving up for a new building. So they're like, we're saving up. We're going to start a new campus for our church, expand the kingdom, all good and great things. And people were, giving above and beyond the tithe. And so that's amazing. But then the church was holding it in cash. And as we know as Bitcoiners, that has been a very, very terrible financial strategy, especially over the last 4 years with the big money print from COVID and the highest inflation we've had in, I don't know, 40, 50 years. And they've even admitted that it was that high. So we know it was much, much higher. But it was just heartbreaking. It was heartbreaking when I heard that, because they believe they're doing what's right and what's good and stewarding those resources well, but in reality they're not. And so the education that we do, we're doing as Bitcoiners, but also believers, is so critical that it reaches the church, so that we can again, preserve the resources that God has given us and be able to utilize them for even more good, into the future. That church in particular has yet to be able to afford that building because, one, their purchasing power has just tanked and that building has skyrocketed in value that they're looking to, acquire, whatever that building may be. And so, that just, man, it hurts so much when I heard that. And he is now pushing to help them understand this problem. And, he was willing to donate in Bitcoin to the church to kind of orange pill them and help them understand this. But I think it's just, that's something that's near and dear to my heart, and something I'm working on now, like I said, with my personal church as well, to help them understand this problem, because I my people perish for lack of knowledge. That's in the Bible. And that's essentially what this is a lack of knowledge. And unfortunately, the church is being stolen from, through debasement of the currency. And so that is something we have to fight against, with everything that we have. So, that was just a side anecdote there, a story, because man, it just hurts so much to hear that. But anyone listening, if you are a believer, Bitcoiner, go talk to your church, help them understand this. If they won't listen to you, refer them to us, being kind of this bridge between traditional financial world and the Bitcoin world that we are. More people are willing to open their ears and minds to listen to what we have to say. And so, we'd be willing to sit down and have a chat with them and help them understand this problem, because it's not easy to wrap your mind around, but once you do, it can be transformative for our local community and the church at large.
Absolutely. Just fantastic anecdote and fantastic words that you gave there. Kind of to round this out, let's talk about some common pitfalls when integrating Bitcoin into financial plans. There is kind of this archetypal Bitcoiner that buys, holds, does nothing with it, in self-custody, no formal financial plan whatsoever. What are some of the most common mistakes when individuals try to incorporate Bitcoin into their financial strategies without any kind of proper guidance?
Yeah, absolutely. I mean, when it comes to Bitcoiners that are, let's say, 80, 90, 100%, allocated to Bitcoin, they're not thinking about the stuff, a lot of the stuff that we mentioned earlier. Okay, taxes. What are you going to do to avoid this 20, 30, 40, however much it is, percent haircut on your stack when you could have easily avoided that? So we need to be thinking about taxes. We need to think about how much do we need to actually be able to stop working. If I want to retire, or maybe I just want to go part-time and be able to spend more time with my kids because I was early to Bitcoin. Okay. How much is that? What are those numbers? What does that look like? We need to actually take this beyond HODL and allow this to, get into your financial plan. So really a lot of Bitcoiners are just really, they're flying blind right now, in not taking these sound financial planning principles and applying them to their wealth, because they believe that, oh, I've completely opted out of all of this, because I bought Bitcoin. And so, obviously the tax piece is a big one. Planning for financial goals is a big one. We are coming up with a way to translate these financial planning principles for people who want to get on zero. They're entirely living off of and transacting in Bitcoin in their life. My business partner is doing that right now personally, and so we're working through, okay, how do we actually make this happen so clients can do this? But these are the potential, again, risks, the volatility of Bitcoin. If we get another 70-80% drawdown and you were planning on paying for your kids' Christian school tuition, and now all of a sudden you can't do that, that's a big problem. And so, I think really just stopping at buy and hold is the biggest issue. So we have the taxes, we have the planning for goals thing that people are not doing. We also have, on the estate planning side, like we mentioned earlier, people aren't thinking about, how do I, if something happens to me right now, how does my spouse, how do my kids actually access and benefit from this Bitcoin, and are they educated enough to be able to understand it? Is a big issue. We can also look at insurance. Insurance. What if you're, humbly stacking sats right now for your family's financial future, but all of a sudden you get disabled or you do pass away before you've been able to accumulate enough to, give your family that financial freedom that you're hoping to give them. Well, there's still a need for life insurance. Okay, well, how much life insurance do you need? Well, that's a question, or that's an answer that's really different for everybody. Do you need disability insurance just in case you can no longer earn income or fiat mine, whatever you want to say. So the pitfalls, that we're referring to is completely ignoring all of these other sound financial planning topics and principles, because you believe that, oh, I'll just buy and hold Bitcoin and everything else will take care of itself. So it's just simply not the case. And I wish I could, kind of broadcast that message to the entire world at once and get them to wake up. Like, HODLing is not a financial plan. That's speaking specifically to the Bitcoiners. But then, the people who don't understand Bitcoin, we've already kind of jumped into their potential pitfalls. But so, yeah, I mean, there are so many pitfalls that we could really talk about. We've touched on some of them. But if I could just say, the main clear message that I'd like to get across to people listening is that don't just stop at buy and hold. Ask the next questions. Go deeper into how Bitcoin actually translates into what you want you and your family's financial future to look like, and give it the intentionality that it deserves.
Mitch, absolute banger. HODLing is not a financial plan. I love it. Personally, I think every Bitcoiner, and maybe a non-Bitcoiner watching this, should realize that just buying and holding is not a financial strategy. You need a formal framework for how you are going to plan out the rest of your future and your family's future, and do some living along the way. Right? Not just sitting and stacking sats and being alone, but actually being a steward of yourself, your household, your community as well. Mitch Moore, fantastic episode today. I really appreciate you coming on, man. Before we close out here, any parting thoughts, and where can people find you?
I kind of gave the parting thoughts there of HODLing's not a financial plan. And I think I even got a blog up on the website now of a lot of, various questions that you can ask yourself that cannot be answered with HODL. And so feel free to check that out. Our website is strongwealth.net. So that's where you can learn more about our services, what we do, what we offer. And then I'm on Twitter and Instagram and really everywhere else. At Mitch D. Moore is my username.
Fantastic. Mitch Moore, founder and CEO of Strong Wealth. Thank you so much for coming on the Theya Podcast. I'll talk to you soon.
Thanks, Joe.